What's up, you guys? Welcome back to the Average Joe on Money Financial channel, and in this video we are talking stock splits. And more importantly, we're talking about the stock split that is occurring today with Apple and Tesla. Now, as you may or may not know, both Apple and Tesla are doing a stock split that is effective today. Well, technically over the weekend, but we'll call it today is the first day of trading with this new stock price. And so Apple is doing a 4-to-1 stock split, meaning you'll have 4 shares instead of just 1 that you had previously. And with Tesla, they are doing a 5-to-1 stock split. For every 1 share of Tesla you had, you now have 5. So the big question we want to answer with today's video is, does a stock split mean that now is the right time to buy the stock, both for Apple and for Tesla? And we have a stock split history for Apple that we can look at, and then for Tesla, this is the first one they've ever done. We're going to look at Apple's stock split history, and we're also going to look at some research and studies that were performed on stock splits and future performance to ultimately understand, to answer this question for you guys right now, which is it now the right time to buy Apple and or Tesla? Let's go ahead and jump right into the data right now. I don't want to waste any of your time. Let's jump right to the research. All right, guys, so we're here on my computer screen and we're talking Apple and Tesla stock splits. Now, just to make sure we're all on the same page here, what exactly is a stock split? So what happens over time is as companies are successful, they outperform their peers, their stock price per share goes up in value. And eventually what can happen at times is your stock price per share becomes so high that the average Joe investor out there is unable to purchase a whole share at one time. Case in point, Tesla was at over 2,000 before this stock split, and Berkshire Hathaway Class A shares are at 327,000 per share. They just don't do stock splits. But point is, it becomes burdensome for the average Joe investor to purchase whole shares. Now, this is less of a problem now than it was before because now many brokerages, especially Robinhood and M1 Finance, allow for fractional share purchases. So you can purchase half a share or a quarter of a share, whatever you can with the $100 or $500 that you have to invest. That being said, though, companies will often look, especially Apple and now Tesla, will look to make sure that their stock price per share stays low enough so that the average Joe investor can continue to invest in the company and feel like they can purchase whole shares. So Apple at the time of their stock split was at $500 to $600 per share, and they're now at, as you can see here on the screen, $125 per share that they'll be starting to trade today. And with Tesla, as you can see right here, we've got right now it's at $443.40 per share. That reflects the split of 5-to-1 shares, and they were at over $2,000 per share before the stock split, which can be burdensome to purchase a whole share of. Most people don't have $2,000 to invest at any one time. So what the company does with a stock split is, if the company's at 2,000 and now they're at 400, that reflects a 5-to-1 stock split. So if they previously had, we'll say, just 1 million shares outstanding, then after the stock split, they would have 5 million shares outstanding, but each share would be worth less. Instead of each share being worth $2,000, it's worth $400. So ultimately, there's no fundamental shift in the overall company business or the capitalization, how much the company is worth. It's worth the same, but the number per share is different. Now that leads to the next question, which is, what does that mean for the future? Do stock splits equate to additional outperformance in the future? Are companies going to continue to outperform because of that lower share price? So let's go ahead and take a look here. With Tesla, we have no history, so this is the first time it's ever happened. We can only look at previous stock splits. But with Apple, we can look because they've previously done a stock split 4 different times. Let's take a look here at the chart with Apple. Let's see here. So actually, let's go to their investor page here and scroll up. So, whoops, I missed it here. How many times has Apple stock split? So they've split 4 times since the company went public. They split on a 7-to-1 basis. No, let me go back here. On a 2-to-1 basis in June of 1987, June of 2000, February of 2005, all 2-for-1 stock splits, meaning that their stock price was cut in half and the number of shares outstanding doubled. And then they split on a 7-to-1 basis in 2014, and then now they're splitting on a 4-to-1 basis here in 2020. So let's go ahead and take a look here at what Apple's price per share has done performance-wise since these stock splits. Let's pop over here to Yahoo Finance. So we can see here the stock splits are in, let's see here, there's one right here, 1987, then there's one right over here in 2000, 2005, and 2014. And as you can see here, the stock price has stayed, this is on a split adjusted basis, meaning the stock price has already factored in the stock split into these prices. You can see here that not much changed here. These were only 2-for-1 stock splits. The company didn't go down in value, as you can see over time. As you can see right here, after this stock split, it was at $5 per share. Then you come here, and it was at $84 per share. And then you come up here, and it's really taken off since 2014, as you can see, as part of the overall tech industry, including Tesla. So what you can see here is that over the long term, when you factor in these stock splits, Apple's price per share has continued to improve. It's gone up in value. So just because Apple's stock price has continually outperformed after every stock split does not mean that after this one, it will continue to go up in value. Really, with Apple as opposed to Tesla, we have a body of evidence as to why their company's stock price is doing well. They are continually innovating. They are performing well. Their business fundamentals are sound. They're making money, right? They're making a continual profit, and they continue to innovate. And that's why they're doing well. Now, let's talk about Tesla a little bit, because Tesla is a unique stock. It just now started creating a profit for their shareholders just over the past 2 quarters, which means that they are actually eligible to be included in the S&P 500 index. So we've got that going for them. But ultimately, this company has performed well stock price wise based on what everyone believes this company can do in the future, as opposed to what they're performing right now. That's ultimately what the stock price is, right? It's what you feel how the company is going to do in the future, not necessarily how they're doing right now. So since we don't have any stock split history with Tesla, we have to understand maybe historically with other companies out there, what has happened after a stock split. And thankfully, there has been some research and studies performed here. This article is it's at pointsandfigures.com. I will link to this article in the description below. This one was written by Jeffrey Carter back in 2012, so it's a little bit dated, but it's basing its information on research completed historically. So if we scroll down here, we can see here a 1996 study. Let me just highlight right here. A 1996 study by David Eikenberry of Rice University measured the short and long-term performance of stock splits. His research included all the 1,275 companies whose stock split 2-for-1 between 1975 and 1990. He compared the split stocks to a control group of stocks for similar-sized companies in similar sectors that had not split. And this is the interesting part here, because remember what we talked about earlier, stock splits do not fundamentally change the overall business fundamentals. It just changes the price per share. It increases the number of shares and lowers the price per share. It doesn't change the business. But his results, as it says here, were startling. The split stock group performed 8% better than the control group after 1 year. And you can make a case for the fact that, after 1 year, maybe there's just a lot of consumer sentiment, investor sentiment that, oh man, this company's going to do well, so I'm going to continually buy more shares, and that maybe props up the value. But no, it actually says after 3 years, they performed 16% better than their control group peers. And in August of 2003, they updated the stock split study. This time they looked at companies from 1990 to 1997 using a similar methodology that included 2-for-1, 3-for-1, and 4-for-1. Let me highlight this for you guys. And 4-for-1 stock splits. He found the results were essentially the same. Shares of split stocks on average outperformed the market by 8% the following year and 12% over the following 3 years. Now, putting aside the fact that it's Tesla, right? Because Tesla is unique. This history tells us that stocks perform better after a stock split, both in the short term, 1 year, and the medium to long term, 3 years. So without knowing Tesla, we can see that it generally is a good idea to buy stock in advance or right at the time of a stock split because they continue to outperform the market. And Tesla is unique, right? They just started making a profit. The question here is, will all these investors that are lining up to buy Tesla, we know that there are many people that believe Tesla was way overpriced, and you can know this because Tesla continues to remain the stock that the most people actively bet against by buying puts, meaning that they're betting that the price of the stock will go down in the future. Yet it continues to go up. Tesla is unique. We'll see if their business fundamentals stay sound, if they can continue to turn a profit for their shareholders. But people who like Apple computers and Apple products, and I'm an Apple user myself, I like an Apple iPhone as compared to other competitors. And Tesla, the people who own and drive a Tesla, they have a unique fan base, for lack of a better term, or an investor base, people love their products, right? They will go to bat for Apple. They'll go to bat for Tesla to say that Tesla is just a better vehicle or Apple is just a better product that they prefer to have. So ultimately, we don't know what's going to happen here, but the history tells us, and including history for Apple stock itself, history tells us that it's a good idea to buy Apple and to buy Tesla in advance of, or actually starting today, because the history tells us the stock price will continue to go up. That being said, we don't know what the future holds. We don't know how future events may impact both of these companies' stock. But I just wanted to kind of take a look at the actual data and the research both for Apple and for Tesla and historical companies that have split their stock, just to understand what has happened in the past. So what has this led to for me? Now, I already own a good portion of Apple, not as an individual stock, but as part of the index. A massive part of my 401k and my Roth IRA is in the S&P 500. And I also have a big portion of Apple stock as part of the Vanguard Mega Cap Growth ETF that I have. So I probably got about 10% of my Roth IRA in Apple if I had to guess. But I also made a point in my Roth IRA with M1 Finance to slot aside 5% of my pie for Tesla starting today. So I knew I already had enough Apple in there. I didn't feel like I needed to add Apple as an individual slice in my Roth IRA M1 Finance pie. But I did add 5% for Tesla because I didn't have any Tesla stock actually, which is kind of, in hindsight, it makes you think you're a fool for not owning Tesla. But moving forward, I do have a portion of my portfolio with Tesla. So now is your opportunity to leave your 2 cents in the comments below. Hopefully you found some value out of this video looking back at historical data and research and studies on stock splits. Make sure to let me know, do you own Tesla? Do you own Apple? And what are your thoughts moving forward about what the performance of the stock will do based on these stock splits? Make sure to leave your 2 cents in the comments below. And if you haven't done it yet, you should consider hitting that subscribe button below and clicking on that notification bell and selecting all notifications to be alerted to all of my future videos. On my channel, we do have a bend toward investing, specifically dividend investing with my Robinhood dividend portfolio, but we also talk about all things personal finance that affect people like you and me, the average Joe. Things like budgeting, paying off your consumer debt as quickly as possible, investing for long-term growth and for dividend income right now, and everything in between. So if that resonates with you, you should consider hitting that subscribe button and joining the average Joe on Money financial community. That's all I've got for you guys today. So make sure you have a great rest of your day. And during this pandemic, guys, make sure you stay safe both physically and financially. Have a good one.